Welcome to TradeTheMBI.com and our continued discussion of the Shakeout Indicator. And I thought I'd go over with you a few of the lines that you're seeing on the chart here. First, you have this purple line. I call that the sell line, because when we reach this particular point, you've so exceeded rational buying levels that it's time to think about getting out in a big way. The yellow line that you see here that's solid is a warning line, and once you've exceeded that level, you're put on notice that you need to be careful about what's happening here because you're reaching points of divergences, meaning that particularly price may be going higher, and if you're not exceeding and making higher histograms, then you're in trouble. When we get into some of the detailed analysis, we'll start going over what some of these moving lines, the red, the yellow, as well as the brown colored here along with the blue, they have implications as far as significance of trend in that, and they get into a lot more of the complexities of this indicator. But for now, we're going to go and focus on a couple of the simpler ideas of what a shakeout really is. And for the most part, we selected this part of the chart here. This is 2007. Everything's wonderful, prices at record highs, and you can see the market is moving along, and the shakeout indicator is following it in kind. Now, when we look at the shakeout indicator, certainly any dip from a previous high you can use as an opportunity to sell, and any increase in the histogram you can use as a buy signal. But within that context, we look at a little bit broader range of it, and when we have these kind of rolling slopes, what we're looking for is to see, are the highs of these new highs that have just been formed matching as a higher high with our histogram. And in this particular case in 07, yes, everything looks good. It makes slightly higher histogram readings. That's fine. Then we come along and we make another higher high, but this time the histogram a little bit lower. You know, it's not horrible, but it's a little bit lower, and you can see the drop-off was nothing more than what we had seen before. Nothing to be too alarmed about. When we look at our upper histogram, we've never breached the red line, so in the extreme histogram readings, we're not concerned about it as well. But what happens when we get into this next one right here? We find that now we have a complete trend line that's able to establish that we're making lower and lower moves, which means there are bigger buyers that are getting out sooner in the market, and your overall trend is in serious trouble. From there, you can see that we dip down, and then sure enough, the extreme histogram tells you, yes, in fact, these lows are going to have to be retraced as you come across. It doesn't quite happen immediately, even though the histogram rolls around, gives additional buy signals at these particular points, and rolls across, and then makes another dip. This time it does take out the low, but unfortunately it also dipped below the red line on the extreme histogram, meaning that that low is going to have to be retraced again. And so what becomes very interesting is that the large players in this particular case were not prepared to get out completely. And this is something I try to explain to people. It takes days and sometimes weeks to unwind a large position. And you have to hold price up, and you may end up having to really push things higher in order to get out of the position that you want. And so we come across with the shakeout indicator having made some spike lows, even though price didn't make spike lows. And some of these become warning signs of what's to come. Now, at this particular point, you're thinking, okay, we've moved back to a positive trend, all is well. But we're looking at this line here, and you've now made a higher high. Everyone's getting excited because you've broken out to new highs. You didn't collapse. You broke out to new highs, and everyone tells you you want to buy a breakout of the highs. It's not a good trade, to be honest with you, and unless you have the indicator supporting it. Now, in this case, if the shakeout had been higher, I would have said absolutely buy that. But in this case, I'm thinking, well, I haven't seen a break above the line. Maybe it's about to happen. So as we move forward, oh no, I get a dip down. We actually move below it, and that becomes the resistance point, which is telling you that the large players intend to exit and exit in a big way. You've already seen the divergence. They've held price up because they needed to get out because they weren't ready to get taken to the cleaners. They want to leave that for other people. So they've broken up to new highs. caught a bunch of new people, and they sold heavily into it. Now, a lot of people say, oh yeah, but you typically get a return back to that breakout point, and then it just continues to the upside from there. Well, not according to what the shakeout is telling us here. And if we begin to scroll forward, you might be thinking, oh no, price is holding up just fine. And then, uh-oh. Not only did you retrace that low that we were expecting there, you also have these raised histograms that we didn't even talk about earlier from the extreme histogram that have to be retraced that hadn't been yet. And sure enough, price makes decay. Now, you begin to get a little bit of a rise in the shakeout indicator, and this is where some of the interesting aspects of this indicator become, because even within a downtrend, we have a cycle that sets up within itself. We expect this to roll higher and then roll back down for a second time in the cycle, just like it's starting to do there. And it's that second cycle that becomes very interesting as a buy opportunity, where most people are thinking that the market is headed to new extreme lows. And this is something that I talk about in the previous extreme histogram one about catching a falling knife. The knife is not needing to be caught because it hit here, it's bounced up, and now we're getting a soft landing with the knife, and we're going to be able to just pick it up basically off of a soft pillow and be able to trade this alongside where other people would not even dream about being able to do so. And you can clearly see that in fact it does exactly as expected per the shakeout indicator. So that is the beginning of the concept about how the shakeout indicator works. We're going to get into a little bit more of the buy and sell triggers that are corresponding with it. But I hope that gives you an idea of that the market really isn't as unpredictable as some people make it out to be. But as always, continue to trade well and look for the next installment.